Jim Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people and friends, I'm just trying to help you make a little money. My job is not just to entertain you, but to educate, teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. All right, we got two markets. A set of stocks that goes higher, and another set of stocks that seems to do nothing or drift lower. They seem pretty equal in number. To me, the differences couldn't be more stark, though. The winner's so obvious. The loser's walking around with a L on their forehead. But on a day where, once again, the sector action was hidden by the averages, Dow declining 107 points, S&P flat on the day, NASDAQ gaining 0.31%, it's worth breaking things down so that you can see what I see. So allow me to break this market down into 5 winning sectors and 5 sectors that, frankly, can't measure up. Of course, things could change on a dime. The slow ones now will later be fast. Thank you, Bob Dylan. I'm always happy to own some minor chords. Talked about that in the Investing Club member today at lunch. But the bigger money is made simply by going with the flow. No need to be contrary. First positive area is cybersecurity. The dangers have never been greater, and the group's winners are bountiful because there's just so much business because there are so many cyber criminals, and some of them are state-sponsored. We're doing something for the club that we've never done. We actually own 2 of them for the trust. 2. What are you talking about? Not diversified? I don't care. We own CrowdStrike and Palo Alto Networks. It's rare for us to have 2 stocks in the same relatively small sector. But the companies are doing so well that I kind of wish we even owned the third Zscaler, which is doing as well, if not better, than the 2 that we own. Still, Palo Alto and CrowdStrike are winning huge deals. And while their stocks have been volatile at reporting time, their long-term direction is clear. It's higher. Second group of winners, pretty much anything related to crypto. Now, some are linked to buying and selling crypto. Think Coinbase, Robinhood, the Circle Internet. That's that newly public stablecoin play, which came out of the IPO gate super hot. Let's cool off a slave. There are lots of smaller stocks that emulate these big dogs, and you see them trading all the time. You know what I mean? Meme. Third, the data center, which is just going bonkers. You need to know what's in the data center. Starts with NVIDIA, of course, which hit an all-time high today and is now the largest stock in the world. My late NVIDIA. The data center is built around NVIDIA's chips. Lately, though, we've been seeing AMD, their only semi-meaningful competitor, stock is up like 40 straight points, win a lot of business. Same with Cisco, ARM Holdings, Marvell Tech. Broadcom plays a huge role in these. Vertiv makes power and cooling equipment for the data center. CoreWeave runs data centers and rents out their computing power. Dover and Eaton supply parts of the infrastructure. Vistra Energy and Constellation Energy produce and sell electricity for the data center. GE Vernova makes the turbines for the power plants. I know it looks like turbine, but you pronounce it turbine. The data center alone has caused a huge spike in electricity demand, and the ancillary players from that anomaly are doing well, too. Fourth group of winners, the semis. Now, lots of overlap with the data center, okay, including the biggest being NVIDIA. But there are plenty of semiconductors and semiconductor capital equipment stocks that are on fire. There's Texas Instruments, NXP Semi, Applied Materials, KLA. This goes, you know what? Lam Research, got to put them in too. Don't forget Micron, which reported a pretty good number this very evening. And CEO Sanjay Mehrotra will be on Squawk with me, that's Squawk on the Street, tomorrow morning, so we can find out more. Whoa, whoa, whoa. Fifth and finally, and yes, oddly, the banks. It's been ages since there's been a leadership group, but interest rates are high and the banks do well in that environment. They do terrifically when unemployment is low because people rarely default on their debts when they have jobs. On Friday after the close, we're going to see the bank's stress tests and the grades. Those are the ones that are administered by the Fed. I think it could be still one more positive catalyst for a group that's been a real winner under President Trump, who obviously favors deregulation. Today, the banks were told that they can have a little more leverage and don't need to put up as much cash. That's just incredibly bullish. My favorite is Capital One, which just closed on a key acquisition, Discover Financial. I think that it will turn its credit card business into an even bigger house. COF. All right, now, the losers. Let's start with housing. We're seeing anemic new housing starts. We've seen terrible mortgage numbers. The home builders have put up awful reports. Inventories are beginning to rise at some of the big builders, so they're cutting price. Home building is a terrible business right now. You can't touch this group until the Fed starts cutting rates. Toll Brothers, Lennar, KB Homes, all weaker, all toxic. Second loser cohort, the autos. Right now, they're in tariff hell. I have no idea when they'll end up paying, what per car, what they might not pay. Who the heck knows? They don't know either. It's just incredibly complex. But they're so snake-bit by the trade war. These companies need rare earth minerals from China. They need parts from all over the world, and they need financing to be cheaper. I mean, that's a real fearful trifecta. Third loser, freight transportation. Truckers can't seem to make their numbers. The railroad stocks can't get any momentum.
All aboard!
FedEx showed you how hard this business is when it reported last night. Their business-to-business service has been stuck in neutral, even as the business-to-consumer side is okay. But FedEx hasn't been able to make the street's numbers. I think we've got some opportunity here, though. FedEx has cut its capital expenditures and chopped its expenses. It's a coiled spring. I like coiled springs. But understand that it won't spring until we see how the tariffs shake out, because so much of the business involves import-export. Until then, spring stays coiled. Next up, retail. Oh, man, it's all over the map. But for the most part, the stocks are awful. Kohl's looks so troubled. Macy's can't get out of its own way. Closeout stores, Ollie's just downgraded. Burlington, Ross, TJX, all trading terribly. Target's been clobbered. Home Depot, ouch, I like it, but it's very, very hard to own with such a horrendous housing market and a miserable garden season. If you want Home Depot, you have to hold your nose and buy it in anticipation of the rate cuts for the Fed. That's what we're doing for the Travel Trust, but it's a struggle. I have a cold. This helps. We are sticking with it. Finally, there are the miserable consumer packaged goods places. Oh, my God, they're so horrible. Today, the once invincible General Mills, we used to call it Generous Mills, put up incredibly weak numbers. The General used to be the most clockwork of the group. Today, the stock slipped over 5%. Amazing. If you listen to management on the conference call, they don't even sound challenged. It seems like they think it's business as usual. They chatter on and on about some algorithm that gives them the numbers they want. But they don't seem to understand that they got to cut price big time or do some merging in order to make things palatable. Meanwhile, usually strong stocks like Colgate or Procter & Gamble, they can't get traction at all. Hey, 2 weeks ago, we got this quarterly report from James Smucker. With a name like Smucker, it was horrendous. Hurt by its ill-fated decision to buy Hostess Brands, the parent of Twinkies, right on the eve of the GLP-1. I am told that people who take GLP-1 are repulsed by ho-hos. They hate ho-hos. Or how about Constellation Brands? The alcohol company has been 4 times cursed. GLP-1 drugs cut the craving for beer. Gummies give you the same high as many calories. I have no idea about that. Younger people don't want to pollute their bodies with alcohol. I don't know anything about that either. Its big Mexican beer brands, Corona, Modelo, and Pacifico, are victims of the White House immigration crackdown, which the CEO pointed out on their conference call in April. Unfortunately for Constellation shareholders, these immigration policies are impacting a meaningful chunk of their customer base. So here is the bottom line. Now you know the 5 ins and the 5 outs of what's working in this market. Never forget it. Write them down in your hand. You know what I mean? Like, put it right here. Put them right here. Whenever we have downdrafts, even intraday downdrafts, remember what's been working and what hasn't. Right here. And things can change. But for the moment, I expect the winners to keep winning and the losers to keep losing. And now what we're going to do is we're going to speak to Bill from Indiana. Bill.
Hey, Jim. How are you? Thank you for taking a minute to consider my question, which is about Netflix and whether it's time to take profits or to double down on this. It's really been a durable stock. It keeps beating all the forecasts for profit, and the price is surging. I mean, it's up 43% already this year.
Well, but you know what? Let's think about this, Bill. I mean, they are going to be the entertainment channel, so to speak, for the world. It's worth $542 billion. That makes sense to me. I don't want to double down because I think you might get an intraday swing at a point where you can buy some. But I'm not going to go against this company, which may be one of the best-run companies in the entire world. And I am not going to tell you to sell the stock. All right. Remember which groups are working. You can write them down right here, okay? That's where they're handy. And which ones aren't working, put that on this one, because I think the winners are going to keep on winning, and the losers are going to keep on losing. Oh, man, money tonight. SoFi is relaunching crypto investing, the first of many services planned in the space. I'm sitting down with CEO Anthony Noto to hear his plans to reinvent the future of finance. Then Amgen is entering the world of GLP-1s after getting some important data earlier this week. Should investors start viewing the stock under a completely different light? I'm going to give you my take. And what the heck happened to the stock of Paychex today? I'm going to get some answers from the CEO. Make sense of this post-earnings slide. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.